about how you can spot institutional levels using the predictive power of Fibonacci, how to find the best entries and targets for the instrument that you're trading. Before we actually dive in, please take a second to read the risk disclaimer. And what we are saying here is basically that trading involves a high level of risk. It may not be suitable for all investors. And I'm pretty sure you know that you could lose money if you do not know what you're doing into the market. So before deciding to trade, you should carefully consider your objectives, your level of experience, and risk appetite. Individual performance depends upon each person's skills, personal skills, time commitment, and effort. So thank you very much for sticking around to the very last hour of this huge event, huge educational event. So for those of you that do not know me, my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I have been doing this professionally for the last 17 years, and prior to coming into this industry and trading my own accounts, I come with 10 years in investment banking. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, and amongst which I do teach how to use Fibonacci's, and that is Fibonacci retracements, projections, and price extensions. And this is besides all the other support resistance levels that I teach. I also teach specific trigger times, and this is in relation to day trading, so you don't waste your time or your money. There are for the morning session, there are 3 specific trigger times for trades. And if you line these up with Fibonacci's and other price correlations, you will get a really dynamic trade that will go in your favor more than 80% of the time. I also specialize in specific price zones in chart synchronicity and divergency, multi-time frame correlation, a strict set of trading rule, and 10-point scoring system that enables myself and my traders to identify trades with ease. So I do use major confluence levels on my charts, and these create high velocity moves, and this is what I specialize in. For those of you that are very new to Trade Out Loud, you can also find us online. Our website is TradeOutLoud.com, and we're going to have a brand new website in a couple of months, I think less than a couple of months, and fingers crossed for that. Our website has been around for the last 10 years, so we've had the same website, so it's definitely due for a little bit of refresher. You can also find us on social media, on Facebook and Twitter, YouTube and LinkedIn. On Twitter, I'm a little bit more active than on any other outlet, social media outlet. I do post trading ideas that are posted before they happen, and I do send some free alerts to all my followers. So let's talk a little bit about the role of technical analysis and why everybody is so excited about technical analysis. And if you guys recall, if you were still around trading about 15 years ago or so, you would tune to CNBC and you would hear Kramer talk about fundamentals 100% of the time, and everything was fundamentals. Well, the market has shifted dramatically, and you can see that a lot of technical traders are invited to the show. A lot of other specialists are talking only about the technical levels on the charts. So technical analysis basically is the art of forecasting the future price direction through the study of price and volume. Technical analysis helps you stack the odds in your favor. The more odds, the better, because those are creating your confluence areas that represent triggers for algorithms, for institutional traders, etc. So why do we need technical analysis? Well, because we need institutional participation, and this is going to help us get into trades at the same time with the institution. So we don't have to follow institutions and get in after the fact. We just scale in accordingly with the institutions. And institutions need a strong technical and fundamental reason to participate into the market moves. Is Fibonacci enough? And this is the big question tonight. Is Fibonacci enough for your trading? Well, the thing is that it is a very powerful tool. I use it. Do I use it on a daily basis? No, I do not. So we're going to touch base upon that topic. We're going to circle back. It is a technical indicator that uses pure price action. So therefore, it's not a delayed indicator because it's based 100% on the market oscillations. It can be applied on any instrument, and this is what I love about it, whether you're trading futures or stocks or cryptocurrencies or Forex or anything that you're trading, even options. It gives you exact target zones that are very predictive, especially if the instrument is trading into new highs or into beyond new highs or beyond new lows. So it's a great predictor for targets, and this is what I mostly use it for, especially in this market environment where we are seeing that stocks are hitting all-time highs after all-time highs. But the trader must have a very good understanding of the trend before they actually dive into Fibonacci. So if you're very new to trading, I really don't recommend you dive into Fibonacci head first. But actually learn, and we're going to dive into a little bit of what skills you need to have before you actually embrace Fibonacci's. It can be used in up trading markets and down trading markets, and it is not applicable in all market scenarios. So for instance, in sideways markets, it can be used as a tool to predict new highs or new lows, depending on the context and depending on the major trend. Trading basically is a system. So the more you understand that trading is not only about support resistance, it's not only about Fibonacci's, it's not only about, we talked here about Elliott waves, it's not only about entries, it's not only about finding stops, it's not only about strategies altogether. Trading is also about management. How do you manage the trade? How your psychology for the trade. So when we talk about management, you talk about a planned management. So if you find yourself that you're in a trade, you have to make sure that you have a management system in place, because if you have a winning trade, then guess what? If the trade stops out, then you have a management plan in place. So you had a pre-planned stop to protect your capital. But if the trade goes your way, you really need to have an area where you develop your targets and your plan. How are you going to react into target one? Are you going to raise your stop? Are you going to scale out at target one? Are you going to keep the entire position? So what are you going to do into each and every single target? And that creates that planning. So it's not only about the strategy, it's also about management. It's also, like I said, about the mindset, right? Because the psychological component in trading represents about 90%. So 10% it represents the method. It's also the experience in trading the market, the attention to detail, and of course the multi-time frame alignment and how you look at the market. A lot of times I find that day traders, they live and breathe on one zip code, and that is on one time frame. And they ignore computing the larger time frame into the equation, and therefore they're missing the bigger picture. So that's why they're long, they're short, they're long, they're short, and they find themselves that if they fight the trend, they're often going to get stopped out. And then they'll go like, gee, I don't know what happened because I was trading and I had a clear indication that, hey, I did apply some Fibonacci's on 2-minute charts or 5-minute charts, and they showed me that the price should go lower. But hey, the dominant trend, if you're having a dominant trend on higher time frames, then you bet that that dominant trend is going to take you out in an instant. So trading is an art of putting everything together. And the more you understand that trading is an art, the more you are going to understand that every single component has a very high importance in your trading. So here I have a chart of NASDAQ. By the way, I do trade futures every single day. I have been doing this full time for many, many years. Don't forget that I have been a trader for more than 20 years, trading the market every single day, even when I'm on vacation. So trading for me is a lifestyle. It's not a job. It's not a hobby. It is a lifestyle. I enjoy doing it because I'm very good at trading and I do make a lot of money trading. So if you have a chart like this of NASDAQ, how do you actually look at any kind of waves, at any kind of Fibonacci's? You can't, right? And by the way, guys, this chart, I just uploaded it just a few minutes before I actually came on the mic, right? So in order for you to trade this chart, you have to have a really good understanding of higher time frames, the dominant trend, what is the transition of power within price action. And once you understand the transition of power, then you're going to understand who's going to be in charge, the bulls of the bears. So right before I came into this presentation, I had a call from a trader and it was asking me, for advice, actually in regards to NASDAQ for the overnight trading session. And I said clearly that if it trades tonight 11,125 to 130, it's going to go higher, no doubt about it. It's going to enter into a high velocity zone. And if it surpasses the high of today, the 11,144 is actually going to go higher. First of all, we have a very dominant trend, and we have initiated a weekly continuation, not only a weekly continuation, but we have completed a weekly pattern, and that is a bull flag pattern. And also on the monthly, very important, that we started the month right on Sunday with taking out the prior month's high. So we're trading into a continuation pattern. And as you can see right here, this is the hourly pattern, by the way, and this is the homework. This is my homework chart that helps me actually zoom in to the 1 minute chart, to the 2 minute chart, to the 5 minute chart, to the 15 minute chart, to all my small time frames in order to provide clarity for my trading. So as you can see right here, you have to be very aware of what's happening. So you have a low, you have a higher low with a flat bottom right here, and then you're having a sequence of higher highs and higher lows from this point on. And you can see that something very interesting is happening and that the price is following the 50 simple moving average. Well, this is very common. And by the way, guys, if you're not using moving averages, I highly recommend you do. I do use them. I wasn't a believer in moving averages. And in fact, 20 years ago, I was using pure price action, and I was using more Fibonacci's, and I was using more fundamental analysis for my trading. Well, now I have incorporated moving averages at specific locations, at specific price, because they are algorithmic rich zones. Listen, developers, they're not really smart people, but they are intelligent enough to find out what works in the market. So what happens is that they see that if the price is following the 50 SMA, they start developing a system to trigger every single time when the stock or the index or the currency pair hits the 50 SMA, and it's going to push higher. The larger the time frame, the bigger the reaction the price will have at that certain area. All right, so let's move on. So definitely in a price action like you have it here on this chart, you're never going to have a really good and clear read on any kind of Fibonacci. It's not going to be of any help. How about this? This is the E-mini S&P, and this is, guess what? Today's chart. Took the snapshot just a couple hours before I came into this presentation. So I just wanted to show you very quickly something very interesting that happened. The last correction that we had into the E-mini S&P, and this is a daily chart, was from this swing high to this swing low right here. And then from this swing high to swing low, you could see that we came into the 61.8%. This is the pink, I would say pink purplish line right here. The price got rejected, was sent back down. And take a look, how interesting is this that the 50 SMA caught the price and the rotation happened right at the 50 SMA. Do you see any kind of fib here? I surely don't, right? So as you can see right here, the price rotated off of this fib. It went into the 50%, and by the way, the 50% is not a fib number, but it's just a measure move from the swing high to the swing low. It consolidated between the 61.8% and the 78.6%, and bam, there you have it, a continuation to the upside, taking out the prior high, consolidation at the top, and bursting higher. And you can see small consolidation right here. What is the one common denominator here? It's a combination of technical analysis tools that we're using to refine our system. And it's very easy to read. You don't need a special indicator. In fact, I am true believer that the only people that are making money off indicators are the people that are selling them, because I think that if they would actually make a lot of money off of those indicators, they would actually use the indicator to trade their whole amount. They would go borrow some money, put a second mortgage on the house, and just trade that system into death, right? But no, I'm telling you, everything is about observation, and the more experience you have in the market, the better you are going to become. Take a look at what the common denominator is here. So we had a bounce off the 50 SMA, we had the elevation in price, and then we had within the fib, we have a confluence level right here. We had a confluence from the 20 SMA and with the 61.8 fib that rode the price higher. So now take a look at where the price is right now. A little bit elevated above the 10 exponential moving average. So what does that tell you? The price is entering into an extension. And not only that, but it hit a projected target level into the 3309, 3310 area. And in fact, right now trading into the 3320 when I took this snapshot. So it's getting a little bit elevated. The more it will consolidate into this level, guess what's going to happen next? Boof, it's going to go back to 34. It's not back, but it's going to go to 3,400, an area that has been hasn't been visited before the pre-COVID era. All right. So when to apply these retracements? We apply these retracements when we have very clear pivots. And when we know how to read uptrends. If you're very new to trading, if you do not know how to read uptrends or downtrends, then this is not a system for you. And you're going to do just fine if you are just focused in the incipient stage of your trade development, on very simple concepts, support, resistance, just a couple of moving averages, and then you can add on and you can layer on and you can layer on, and just like you're scaling in a trade or scaling out of the trade. So in this particular case, we connected this swing low to the swing high, and we got this retracement right here at the 61.8%. And this is how we came up. And this is the confluence level that we have here. The confluence level was the higher low. So we have a low, higher low, higher low. But let me tell you one thing. The mastery of buying the dip does not come from any kind of other element than reading price action aggressively in correlation with time frames, with divergency that happens in the market. And that is how you buy the dip. And that is how you start shorting highs and with confirmation. So let's get back on track. So first of all, you have to gather intel. So trading is much more than using one or two tools like Fibonacci and Elliott waves. And by the way, I use both in my trading, but I don't use them on a day-to-day basis, because by the time you calculate if you're a day trader in today's market, and if you take the time in the mornings, like, okay, I got about 5 minutes, I got to determine the Fibs, I got to determine the Elliott waves, the trade is long gone. You got to be super fast in your trading decision. And this is price action alone. But it is not enough to develop a high accuracy trade, because if you want to find a high accuracy trade, you need to have an arsenal of tools that are going to help you get there. So before tapping into these tools, a trader needs to master basic key concepts as the starting point. Like number one, understanding the trends. What defines the trend? How do you know the definition of a trend? Do you know how many guys? I'm going to ask you right now. There's so many people in the room right now, so I want to know. I want to read a lot of answers right now. What defines the trend? How many higher highs and how many higher lows do you need to have in order to have a confirmed uptrend? Can you type it here in the room? 1, 2, 3, 4, 5. How many? How many? Okay, Bill. All right, only Bill. Come on, guys. Okay. All right. Remember, there's no wrong answer. We're all here to learn. All right. Nobody else wants to take a chance. Okay. Permit. I love it, guys. I love it. All of you guys that answered with 2 and 3, and now we're seeing some more numbers coming in. For those of you that count 2 or 3, yes, that's correct. You need to have a bottom and 2 higher highs and 2 higher lows. That is the definition for a trend. So as soon as you see that you have a bottom in and you have 2 higher highs and 2 higher lows, then you could go ahead and you could start trading. But what if I tell you that you could actually have a bottom, and on the first higher low, you could actually start digging in, okay? If we have time, I'm gonna get into that. So understanding price action and reaction to basic price support resistance, understanding candlesticks and psychology behind each shape of candlestick is very important. Setups and strategies applicable to key zones, because it's not all about, okay, so the price came into, let's say, the 61.8%, the golden means, right? Into the Fib. Now what? How do you buy? Do you really buy it at that level? What if it's going to crash through that level, right? Because remember, that is just a safety net. What if it's going to break below that safety net, right? What if it's going to go back to 78.6%? What are you going to do then? You're going to buy it again then? No, so you need to have a strategy that you need to deploy at each and every single set of Fib levels. So setups and strategies are applicable at these specific zones. So this is where you apply pullback buys, pullback sells, breakout, breakdowns, inside bar, dojis, etc. Whatever the strategy is, this is the area where you deploy it and you wait for confirmation. Because other than that, if you just buy it right on support, and I know there are a lot of traders out there that buy at support, how many times have you stopped out just to buy on support without any kind of confirmation that the price is ready to go up or down? Numerous times. And this is the #1 cause of traders blowing up their accounts. And the second one is the second is actually traders not knowing how to position size for their trades. So setups and strategies applicable in key locations are a must. And also determining laser sharp entries, what constitutes an entry. So when I enter a trade, I know exactly to the very cent what entry I need to get. I need to, or whether it is futures contracts, or whether it's a commodity, or whether it's a stock or an ETF, or what have you. So let's talk a little bit about trends right here. So definitely, if you want to, definitely you need to have a low and 2 higher highs and 2 higher lows. That's fine. But if I wait that long, right? And if I wait that long, I may have to wait. And if this is a daily chart, I may have to wait like a couple of months before I get into a trade. Well, that's insane because I need to make money, right? So how do you trade this? Well, there's an easier way to do it. So first of all, if you find that you have a divergence, and I use a tool called the Williams %R, and if I have divergence in that Williams %R, and if I find that there has been a move down with a higher spike in the volume, that is a clear indication that if that is a wider range bar with a spike in the volume, and if I have a divergence into that spot, I don't need any kind of Fibonacci or Elliott wave to tell me that that is the temporary bottom that is trying to set in. So on any kind of 4-hour rotation or 1-hour rotation, that's me right there. So you're going to see my footprints right on that chart. And this is how we nailed the March low into the market, and we have been long ever since. I'm going to show you some results because I put my money where my mouth is. So if you want to take it really aggressively, that's the way to do it. And it's the same fashion you do it for the uptrend. So I know that traders want the holy grail of trading. They want that shiny glittery indicator that's going to say, oops, you got to buy it here. This is where it's going to go. Guess what? There's no such thing as a holy grail in trading. There's only hard work and there's only commitment to trading. So technical analysis, back to circling back to technical analysis, will allow you to trade with precision any instrument on the planet. In fact, right now, if we have time at the end of the presentation, maybe I'm going to ask you guys to give me some charts, and I'm going to give you exact laser shot, first of all, whether we have a trade or not in that instrument. And second of all, precise entry, stops, and targets for that specific, anything, and nothing is off topic. So technical analysis allows you to trade with precision any kind of instrument, whether it's futures, stocks, or forex, options, cryptocurrencies, whatever it is. You just give me a chart and we can discuss upon it. Once you learn how to trade with technical analysis, you will definitely know how to do anything on the planet. It can be used on any time frame, whether you're a day trader, swing trader, or active investor. So the way I see the Fibonacci's and everything work is on a higher time frame, obviously, and into a correction. So you need to have a reason why you need to apply that Fibonacci. Do we have a reason to apply Fibonacci now in the Qs, the SPYs, in the SPX? Do we have a reason to we use Fibonacci now in NASDAQ or the Dow or Russell or any kind of index? No, we don't. We don't, because we have not set a high yet. You need to have a confirmed top, and a confirmed top is not there unless you have you hit some kind of resistance, or you're entering some kind of correction. So you need to have a little rotation off of that spot to form a pivot so you can put your tool over it and you can see if the price is ready to pull back. So technical analysis provides you accuracy, confidence, and consistency because it's a rule-based system, and traders need to have a rule. Traders need to have a trading plan, and that's one of the things that traders don't have. They think they have, oh, I have everything in my head. No, that's not true. You need to have a little piece of paper right in front of you saying, hey, I'm going to get in trades. If you're a day trader, these are my times when I get into trades. These are the specific locations. So I'm going to have the patience to wait for these precise setups for me to get into the trade. Okay, so then you're going to see that traders are going to improve dramatically if they have that little piece of paper right in front of them. It doesn't have to be like, you know, a novel or an essay. No, just a little post-it just stuck to your monitor. So every single time you turn your computer on, you could actually see that in front of you. Having and knowing how and having the precision of technical analysis definitely will eliminate fear and stress, and you could trade with clarity. I trade every single day in front of over 200 people in my trading room, and I trade fearless, and I develop fearless traders. I teach traders how to trade fearless just because they have confidence in technical analysis 100%. And it creates focus and helps with pattern recognition and really precise, accurate locations. Now, how many times have you been in a trade that triggered and stopped you out? Now, be very honest right here, guys. Type of one in the room. You had a perfect trade, it triggered, and then it failed. And then, you know, like moments later, guess what? It rotates and it goes back up in your direction and it hits your target. How many times has that happened? Many times, many, many times. That's right. Because guess what? There's certain time, the market has a certain tempo. Okay, so the market moves in a synchronized fashion, and it has a certain tempo. Within the market tempo, there are trigger times where these algos deploy and they start engaging in a more forceful way. And we know exactly where those times are because we trade with them every single time, and we wait for them in the trading room. When I day trade, we wait for them. So you have to be in sync with the market tempo and with the trigger times in order for you not to get those often stop outs. And I have a win ratio of over 80%. I will show you some results. So that proves that, yes, I know what I'm doing and I know where those algos are sitting. So how many times have you stared at the screen not knowing what to do, yet you pull the trigger anyway on a trade and just to lose money just because you're bored? That is not an excuse. You don't need to trade every single day. You just need to trade recognizable pattern. If you have a pattern, you have to trade. It's very simple. You have to trade. You're going to make money. You don't have a setup. You're not, and you just enter on the fly. You just get in just because the market is moving up or down. That's not a reason. And that's why a lot of traders lose money in trading. So how many times do you feel lost? Do you feel lost not knowing where to enter and where to exit trades? You're just go like, I wish there was something. Well, there are two things here. Number one, the markets may be so choppy at times that they may not provide entries or stops that are required for any kind of non-algo trader. And there are certain times where you enter trades when you should be sitting on your hands, or you don't adapt the time of the day with the time frame that you need to trade. So for instance, if you're a day trader, and this does not apply to swing trading or active investing, but if you're a day trader, you have to know exactly what you need to do. Traders, and listen to me guys, day traders are either exceptional and make money, or they really suck and they lose money every single day and every single month and month after month and year after year. And they go like, I don't know, maybe it's not working. No, it is working, but you don't know what you're doing. So how often, again, do you find yourself in a trade in the middle of the news announcement? You're going like, oh, I forgot about the news. Okay, and you don't have a plan for that. It's fine if you're in a news announcement. Let's say there are a lot of if you're a day trader, there are plenty of news announcements that are coming in at 10 o'clock, let's say. Okay, and if you happen to be in a trade at 10 o'clock, there's only one thing that you could do. Just place a stop. Just place a hard stop so you're not going to be taken by surprise. And if the trade goes your way, fine. And if the trade doesn't go your way, that's great. But I typically do not initiate trades right ahead of economic releases. I don't trade news. Day trade news. If I'm in a swing trade, that's another story. Okay, so swings can sustain these basically what news is a brief interruption in the trend. You definitely have saw how the news reacts. So it swishes up, swishes down, has the first, second, and third wave, and then it calms down. So in trading, you have to keep it super simple. Time to simplify your trading. So if you're using a lot of tools and if your charts are overly crowded, just simplify it. Pay more attention to price action, because you may be able to learn more from price action than any book that you're going to get from Amazon. Eliminate the noise. So any kind of cluttery indicators that you have on your charts, you know, anything that is glittery, just get rid of it. Just be an observer of price action. And I'm going to ask you guys a very simple question. You know, how many of you guys in here watch that show Billions? How many guys watch that show Billions? Do you like the show Billions? I sure do. I love it. It's about a hedge fund. Okay. Yes, Bill, you love it. I love it too. Now, for those of you that know the show and know the hedge fund, you know, style of trading and how they invest and what they do you think that any hedge fund manager or portfolio manager is going to go on the internet, scour an indicator that is $200 or $49 or $500 and buy it and say, hey guys, Bill, do you see Bobby Axelrod just going, going on the internet and just surfing around and saying, hey, I found an indicator, and takes it back to his office and gives it to their portfolio managers and say, hey guys, I found this really cool indicator, is going to tell us when to get in and when to get out. No, it's all work, guys. It's chart work. It's not sophisticated if you have the right tools. But traders have the habit of sabotaging themselves, and they go like, oh yeah, it's so much easier if I had someone, do the work for me. But they're actually delaying their learning process. Okay, so apply a systematic approach to trading, a mathematical approach. Determine entries in minutes and hours in advance if you know what you're doing. In my day trading and in my trading room, I actually call trades. We talk about the trades. We have a clear directional bias every single time before the market opens, and when the market opens, because I don't trade before the market opens at 9:30. So at 9:30, we know exactly what our game plan is, and we wait for the trades to line up. And I wait for either a pullback buy, for whatever it is, for a breakout, whatever the strategy is. But I know in advance what kind of strategy I'm going to deploy by price action behavior, because price is nothing else but a repetition of what happened in the past, right? It's like a crystal ball. You know exactly what's going to happen based on past price action. Well, not exactly what happened, but to about a 85 to 95 degree. So technical analysis is really reliable because it studies natural price action. You have very few technical indicators that pinpoint high accuracy entries with stops, targets available for free on any kind of platform, and Fibonacci is one of them. Free at no cost. Well, if you decide to go via indicators, well, first of all, you're going to delay your learning process. It's going to take you time. You're going to get used to some messy, cluttery charts. They're going to be totally 100% non-professional. There are going to be indicators are lagging and they're delayed. You're going to have monthly subscriptions, or you're going to have to pay up front. And they're applicable only on specific time frames. So guess what? If you're going to navigate from day trading to swing trading to active investing, guess what? They might not work. And like I said, the only people that are making money off of them are the people that are selling them. So technical analysis is a rule-based system. It helps traders identify trades in advance with a very high degree of accuracy. In day trading, it forecasts entries in minutes before the entries. So you have plenty of time to place your orders. You have plenty of time to, to discuss your trades. I usually look at the market and after the market opens in the trading room, we obviously discuss the trade. We pick our favorite, and I specialize in the 4 indices in my day, when I day trade. And we look at the market, and I actually call the trade, so I have the time to communicate it on the microphone. I have the time to type it in the room, right? Whether I'm taking, let's say I'm taking NASDAQ long entry, and I'm putting the entry, the numbers, I'm putting the stop and the number, I'm putting the targets, I'm calculating the target. So I have all this time. And then after I'm done typing everything, I take my mouse and I hit it, and I put my limit orders, because yes, I never take a trade on market. Okay, I only use limit orders. So I have all that time. So I have about 3 minutes to 4 minutes. Sometimes I have more. Sometimes I have a little bit less when the price is very violent, because sometimes we're getting a very active market. But yes, minutes before the entry. So you can imagine, so there were so many people in my trading room, so we're all able to get in at the same price. The other thing is in swing trading. I love swing trading. I absolutely love swing trading. I have been doing it for over 20 years, and I do it. I would not do anything else. So swing trading, you can forecast entries days in advance. So days in advance. Position and core trading, forecast entries weeks in advance. So this is awesome. So you do not have to have superpowers to identify setups, and no special skills required. You just need education, a really good, solid technical analysis skill set in order to determine this. So yes, technical analysis is going to provide you with superpowers. Now, let's talk a little bit about something that is really fascinating about the market, and this is the S&P 500. Okay, and this is a chart from 2000. So basically when I started trading all the way in, this is today's price action right here that you see. So what is very interesting about this chart, guys? So I have some Fibonacci's here. So do you guys remember the 2008 crisis? How many of you guys remember the 2008 crisis? I have traded this. My footprints are all over here, all over this chart. I remember when I woke, when I would wake up, because I was day trading stocks at the time. And I would wake up and it was like, okay, what's my game plan today? Oh yeah, to short Lehman Brothers and financials. Okay, so it was very easy at the time. But yeah, I did have a plan. So I was shorting Lehman Brothers right into the ground. But anyway, so you guys can see here that we had a low. Remember the tech bubble in 2000, and then we came in into 2002, and then we started to go back up. Now, here's the interesting part, guys, that as scary as this pullback was from this high to this low that we had in 2009, it was just a correction on a revisit to the prior support level that we previously had in 2002. Nothing else. It was a swing low to a swing high and a back to the base to the swing one. That's it, to the bottom of the range into swing one. So guess what I did here? I connected this high, right? Because it coincided with the 2000 high, because it was basically a major support resistance. This is, I don't have the chart available right here, but this is the 2000 right here. This is the 2000 top. This is the 2008 top, and this is the low. So we had a range. And because we had a range, I deployed Fibonacci extensions because I wanted to know if we're ever going to get back over this high, but not only for that purpose, where are we going to go, right? And how's the price going to react? So I connected, like I said, these highs to these lows, and I determined these levels, but I did this very early on. So I had this on my platform all along throughout this whole time. And I knew how to navigate correctly on a macro level, because this is what gives you all the macro knowledge so you can trade as the price is moving in on the timeline. So as the price rotated to the upside, look at the very cute bottom right here, very nice indication. So we tried to bottom out here, and then we started to candlestick after candlestick, continuation. So you can see that here, you really didn't need any kind of Fibonacci knowledge to know that this is a continuous move, because all the candles were trading in sequence, right? But then when we had the first rotation and when the price came in, yep, I popped up my Fibonacci because I wanted to know if the price is going to rotate back down and turn around. And sure enough, it consolidated at this spot. Look at this pretty low right here. So if you would, wait for, let's say, wait for waves, I would probably get in around here. So I would have probably missed a few years. Right? I would miss the whole move from 2009 to about 2013. But no, I've traded every single day, every single day here, and every single day all the way to this price right here. My footprints are 100% on this market. So as soon as I had this low, I had the rotation to the upside, I had a pullback, I had a very strong confirmation that this is a pivot low. I had a 200 SMA right here that held the price for about 4 months, because this is a monthly chart, and we had a nice pop into the upside. We had a low, and then we have bottom, two higher highs and 2 higher lows, and we got the projection to the upside. Okay, massive move to the upside, and these are the QE years, ladies and gentlemen, and that's why we move higher. And then all of a sudden we hit a halt, right? Why? Well, it was getting into that pre-election, right? And it was getting jittery. And then the market was, as soon as it hit this extension, I was very cautious because I knew that if it's going to snap over this green bar right here, the 127.2, it's going to go back into this high, which it did, right? Which it did. And then back to square one, back to the top. And I knew exactly that if we're going to pop over this high, this is going to be a massive accumulation for a continuation higher. Look at the tradable void between this resistance and this resistance right here. Massive. Look at the follow through that we had to the upside. This is the first sign of divergence and first sign of volatility that we had in a very long time. In fact, it was more than a year. And then here's another volatility. If you guys recall the 2018 volatility that we had at the end of the year, do you guys know what that was all about? Well, I could tell you, They were testing some algorithms in London, and they have just introduced them in London, not only on the London markets, but also into the US markets. And that created this extreme move in the price right here. But nothing uncommon, just a revisit off the 50 SMA. Look how helpful this 50 SMA is here and following the trend, punching it higher. You can see that it popped higher right here. And this is the COVID drop. This is the black swan, by the way. This is the black swan. How helpful, because it came right into this area. So we had conviction that 22 was going to be a rotation point right here, right? So let's talk a little bit about 2016, right? Because I'm going to show you something, some positions that I still have in my active, because I talked a lot about my day trading, but I do a lot of investing. As you can see right here, you know, this was the decision point. Okay, so this was the decision point for me. So I'm going to show you my investment position since 2016, and I sold a lot of the stocks that I was in since then. I was in, by the way, in 2009, I was in Sirius Satellite, and by the time Sirius Satellite, I purchased it when it was about 15 cents. It didn't have any kind of competitors, so I doubt that OnStar or any kind of automaker would give up on Sirius Satellite. So I invested in Sirius Satellite. I sold it years later for about $6. So from pennies, I made close to $6 on that stock. So these are some of the stocks I picked up. Vonage, when it was just a baby stock, was trading into the single digit. DHIBT. Take a look at Nvidia, guys. I picked up Nvidia. I think it was at $34 or $36, if I'm not mistaken. I picked up Apple as well. It was very, very low, and also into the Qs. Just wanted to show you very quickly. Gold, let's take a quick look. I know Jim has tapped into gold as well, but and it developed a massive sideways range from 2014, and actually the end of 2014 all the way into the end, close to the end of 2018. And we started to trade to gold in our program in 2018, 2019. Yeah, last year was massive for us in gold. Most of the profits that I made in futures were from gold. And I am a very active indice trader, so that speaks volume, because it was moving like wildfire, and then it ignited higher. So these are the targets, and these are the projected targets, and these are long-term. Notice that this is a quarterly chart right here. Let's take a look at the SPYs, and you can see the SPYs right here that, you know, they're punching a little bit higher. And what is the one common denominator that is cradling price right now? The 20 SMA is shifted a little bit higher, so it's gaining a little bit more. It's becoming a little bit more volatile, so it's picking up power trend from the 10 exponential moving average. Also, let me show you a chart in the SPYs, right? In the same chart as SPY, connecting the swing high to the swing low. We were able to determine the area that we needed to be bearish or bullish. So for us, it was very simple. There's no thinking in trading. If it trades above the high, then it's going to be bullish above 32.8 right here. You see this price cluster, it's going to go up. If it goes below, if it crosses this 23.6%, it's going to be bearish. So it's bullish above, bearish below. You can see right here the 50% held the price. Again, this is not a fib, it's just a measurement from swing high to low. And then again, the 61.8% was the lid. And then it was bouncing back and forth until it exploded higher, and it started to rally. Then it come back and it catch by the 200 SMA. That's why I'm telling you guys, use a combination of technical analysis tools, because they're going to really brighten up your, your perspective. I'm going to show you some charts of some stocks that we were in. So this is AMD, 2 trades in AMD. We closed a massive trade in AMD last week. I'm going to show you the results from my portfolio. Massive results in AMD. We picked it up again this week, and look at it go. And it still has room for $89, and this is the Fib extension. Also, QCOM, this is a free trade idea that I provided almost, Kathy, almost. I am 100% not thinking, I'm just acting based on pure price action on my signals to buy and sell. So you have to embrace algorithms. That's the key to trading. And people that are frightened and say, oh, those darn algos took my stop, that you have to learn how to trade with them and trade with them at the same time with them. So most of the time when we initiate trades in the trading room, especially in day trades, but in swing trades is valid as well, when you're seeing, when it hits my entry price, that's when it starts moving. So we are hitting it right at the algo level. So again, this is another free idea. If you follow me on Twitter, I just posted this idea before it happened. It was my watch list, and I also had a recording of the watch list that I had for that week. Also, this is another stock that we are in, KKR, which is running into extension right here, very close to $37 into the target. It still has room for higher, but we need to see the price behavior at that high. So you need to have a lot of conviction when you're trading, because you have to know exactly where is your entry level. Because here's the thing with algorithms don't say, hey, I'm going to buy at support, I'm going to do this. No, they have an exact price because they have the communicated price. They know to stay in the trades as long as the trend is going in their favor. They know how to manage it because they are programmed to do that. They know when to scale out, or they know when to exit. So the tools I use, I want to break it down very quickly. I use moving averages. Don't use a lot of moving averages. You saw that I basically use the 10 exponential moving average. That's the only exponential moving average that I use. I use the 20 simple moving average, the 50 simple moving average, and the 200 simple moving average. So a set of 4 moving averages that I use on all my charts. I use price volume because I want to see the market participation. I don't, when I trade stocks and when I day trade stocks or swing trade stocks, I trade stocks with high volume. So I don't trade anything that is below 1 million or 1.5 million. I want to see a large participation of market volume. I use Fibonacci price retracements and projections. The retracement levels that I use, 23.6, 38.3, 50%, which is not a fib, but it's just a measurement from swing high to low, 61.8, 78.6%. And I use retracement levels of 127.2, 161.8, and 261.8. I'm going to run down very quickly because we're running out of time here, but I just want to show you the performance, and this is from my swing trading program. So you can see right here, we have all the trades documented. All these trades are sent out to our traders on Sunday night, guys. So on Sunday night, all the trades are sent out. If we have some other trades that are developed throughout the week that are very urgent, then they're communicated for our traders as well. But most of the trades are communicated on Sunday night, so traders can have an arsenal of trades to trade for the whole entire week. So January was a slower month. I typically don't trade in the first week of January nor in the last week of December. So I have everything on autopilot. If I have trades that are ongoing, I just, I'm in trail mode. I set alerts, so I take the time off to enjoy my family. But January was a very good month. You can see that we closed with 49.5%, and in very few trades, you can see that 100% batting average right here. The month of February, 100%, no, not 100% batting average. We had a loss right here. We had one loss, but nonetheless, we ended with 59.2%. The month of March was very volatile, was very active for day trading, but it was not very active for swing trading. So you can see that we had very specialized stocks that we focus on. These are our COVID-proof stocks right here. But we ended the month with the same 58.6%. Also, for the month of April, we closed it with 71.13%. And by the way, you can see that we have a trade in USO. Remember, negative prices in oil? Well, guess what? We picked up USO at $4, right? Pretty cool. All right, so the month of May, 43.75%. We're still in trade, by the way, the ones that are in bold. We still have active trades in them, and this is Johnson & Johnson. We added in Johnson & Johnson along the way. Look at the month of June. We still have trades that are open in the month of June. We have Lennar that hit $74. We're still waiting for $75, which is an extension, by the way. And this is longer term, but it's trading at $74. So it hit $74. We took some profits, obviously, but the trade is not entirely closed. We're still in Boeing, KKR. You can see it right here, the trade that, the chart that I showed you guys earlier that is trading at $37. We picked it up at $32.20. And also the month of July, we just closed the month of July, but we still have a lot of open trades right now. And we have massive, massive gains into this month. But again, we're going to have to wait to close the month. We have to wait for these trades to close. So we're not just going to get out of the trades just because the month is over, right? NEO is one of the superstars as well. FUTU, massive trade, massive, massive trade. We're just trailing 35.50 right now. We still have Walmart. As you can see right here, we're very diversified. And as soon as this, okay, you can see Microsoft right here. We're still in the trade. GBTC, so we do have a little bit of Bitcoin there. Also, for the month of August, oh gosh, this is just the third trading day in August. Take a look how active we are. And we do have 100% means that 100% means that the trade is still not closed. That's what it means. So it's still not with calculated. It doesn't have the exit price. Once you see that it doesn't have the exit price, the trade is still active. Okay, so once we have, this is a program that I'm using in Excel. So once I type here the exit price, it's going to provide me whether with a plus or a minus, whether the trade is a loser or a winner. Okay, so 100% means that the trade is still active. It's not closed yet. McDonald's, massive winner, by the way. It's trading over $200. Adobe as well. It needs that 450 to punch through. Take a look at Netflix. We picked it up at 497. These are all, yes, some losses, very, very small losses. My batting average is over 85%. And right here, Netflix, take a look, 497. We're trailing 503. Okay, the Qs, we're still in the game. Qs is still gonna go higher. Chewy right here, $52.50. It was trading other targets into $58, still an open trade. We closed Square and Disney. We closed Disney for the swing portion. We took Disney on Sunday night. I called it Monday morning. We picked it up at 114.42. We closed the swing today at 127.50. 11%, over 11%, 11.40% we made in Disney today. And in Square, we closed Square today at $155. We picked it up at $131.95 on Monday. So don't forget, everything that you see here, all these trades are called on Sunday. So don't you think that you have plenty of time to execute your trades from Sunday to Monday, right? So you have about like almost like what, 24 hours, okay, to act on. Boeing, take a look at Boeing. We picked it up on the second. This is on the second, right? So Boeing, $163.40. It was trading today. Where was Boeing today? Closed at 174.28. Ka-ching, 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 okay? All right, so just want to show you in Disney, this is the move right here. This is where we picked it up, over 13%, right? Take a look at Square, awesome, right? And these are fib levels, so we bought them right on the fib levels. This is Boeing, by the way. This is where we picked it up, right? This is the candle that we entered on the green one, not where the arrow is, but this is our entry, and look at the beautiful continuation higher. And this is not all, but wait, there's more. I do futures, so I do trade every single day. When you trade every single day, when you don't take a break in the market, you're going to become excellent at whatever you're doing. The more you're doing it, the more you're going to have the thirst of doing it, because you're going to have money, okay? So this is from my trading room, from my futures trading room. Take a look at all the trades. And by the way, you can find out the performance portfolio for all of our trades on our website. The futures is under our trading room tab, and under the swing tab, you can find the performance since 2010, guys, since the inception of TradeOutLoud. So I wasn't just trading for a year or two or three or five. We have been, and I have established TradeOutLoud 10 years ago, and I do have track performance since 10 years ago. So these are all the trades that we take in the trading room. They're time-stamped in the trading room. Not only that, but they are also called live on the microphone before they happen. So win ratio in January, 82%. You can see the number of trades, the winning trades, the losing trades. This is the month of February, and this is only day trading. 26 winning trades, 4 losing trades, 30 trades in total, 86.67. What I forgot to mention is that the results right here are calculated per contract, per trade. And we don't take more than 1 to 2 trades, maximum 3 trades once in a blue moon. So these results that you see here, they're trading, if you have been trading with us with 1 contract per trade, at the end of the month, you would have $10,000 for the month of February. March volatility, look at the accuracy. When volatility strikes, I am more focused than anything, because this is where you make your money. Win ratio 91.84%. These are all the trades, mind-blowing. Per contract, 1 to 2 trades a day. And by the way, I didn't tell you the best thing yet. All these trades were executed in 2 hours. I only day trade from 9 o'clock till 12 o'clock, and all these trades were taken between 9:30 and 11:30. That's it. From 11:30, I'm done. Shut down the trading room. I go back to my swing trading, set alerts, go for a walk. I do have a life. Okay, so if you have traded with me 2 hours a day, $26,000 in the month of March. April, 70% batting average, $16,000, 2 hours a day, 1 contract per trade. Win ratio for the month of May, 81%, 9,800, 1 trade a day. And by the way, you can see here natural gas that we still have a trade in. By the way, natural gas rocking and rolling, right? This is a swing. So right now, natural gas is trading at over $2.23 or $2.25. You can see it right here. Natural gas swing, rocking and rolling, right? So we do have other targets in it, okay? So that's why the trade was still open. So if I have a trade that doesn't violate my stop, I leave it open. So you can imagine that this is going to be right here over $15,000 to $17,000 right here. All right, so we're going to add on those juicy profits from this area. Okay. All right, so let's move on to the month of June. We just entered summer, right? Still volatile environment, 66% average. This is 4,625. Again, trading only 2 hours a day with 1 contract per trade. 1 contract per trade. That's whatever, baby trading. And by the way, the trading room is a hand-holding system. It's not that I'm spoon feeding your trades. Not only that, but I am walking you through the trade and managing it for you. All you have to do is hold that mouse in your hand and raise your stop to the area that I'm telling you to. It's like hand holding 101. The month of July, we just closed the month of July, 82.9%, and $12,000, 12,800, actually over 12,800. This is the month of August, and we actually had a trade today in YM, in which we made money again, so it's 100%. We're over $1,000 in 1 contract per person, and this is just the 3rd day. Okay, so for those of you that want to find out more about our trading room, this is the futures trading room, a day trade and swing trade. In the trading room, these are the type of trades, the caliber of trades that you can expect from me. So if you want to step up your trading game with a professional service that is focused on day trading and swing trading futures, this is it. You can check out our website. It is TradeOutLoud.com / live trading room for futures. We do have an active swing trader service. It's called the Active Swing Trader. This is only for stocks and ETFs, and you could visit our website for more details about that. And also we do have 2, if you want to learn how to achieve these results. So it's fine if you want to follow us, but if you really want to learn and become a professional trader, we do have 2 courses. We do have the Power Income Futures Day Trading course, which is extremely popular. And we have tons of traders that have taken the course and that are extremely happy. So if you want to hop onto our trading room and see what people are saying about our course, 95% of the individuals that are in class, that are in the trading room have taken the class. They have started by by joining the trading room, and a month later they go like, no, we got to know how to do it. This is incredible. This is incredible. This is outstanding, because it is outstanding. And the class is August 24th to 28th. It's from 2 to 4 p.m. Eastern. It's a 5-day online class. You get 30 days access to the training room included with the class. So we have actually an early bird special, and we're offering one bonus month in the trading room. That's 60 extra hours of looking over my shoulder and see exactly how I trade. And we also have, okay, here it is. Oops, sorry. Okay, we also have, last but not least, we have a class that is called Wealth Generating. We just wrapped up the this quarter's class. We only teach it 4 times a year. All our classes are live because I don't believe in recordings. I don't believe in DVDs. I don't believe in books. And you need to have a live mentor that is trading the market every single day. You have a question, my door is open. So when you're done the course, guess what? If you have a question, you come back to me. Plus, you can retake the course. We provide we provide the classes live. The classes are also recorded. You have instant access to unlimited questions to me. You have access to the trading room. You have access to the service. So it's not that you're going to learn a course and then it's like, oh my God, I still have to learn how to trade because I really don't know how to trade. So this course is going to be the last course this year. We're already taking enrollment, and we already have students that have already enrolled in this class. It is October 11th through the 15th. It's also from 2 to 4. It's a 5-day course, and we also provide you with another 6 on-demand courses, and that's over 20 hours of education. And if you want to find out more, oops, sorry, there's a mistake right here. This is swing right here. This is swing instead of futures. So this has an early bird special with immediate access to the swing trader until the end of the year. So if you enroll now into the class, you're automatically going to be enrolled today into the swing trader service. And typically all our traders are making the cost of the course like in 1 trade or 2 trades. Like in a month, like we had students that made 5 or 6 times the amount that they have paid for the course. So thank you so much, David. Yeah. And the other one, thank you. The other one is swing. So thanks so much, David, for putting this great event together. And if you guys have any questions and if you want to reach me, you can email us at info@tradeoutloud.com. Thanks.